The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, traders. Well, we made it to the end of the hump. We started at the beginning, now we're at the end of the hump. Welcome to the end of the hump. Welcome to the Tradespoon live trading room, stocks and options. My name is Scott. I'm the head trading coach here at Tradespoon. I will be your host. As always, I will be your friend, your holiday co-conspirator. Is it still, the Hanukkah goes quite a while. Is it still Hanukkah? Hanukkah? If anybody knows, let me know. I definitely want to know. Still a wonderful Wednesday indeed, Dennis. Hello, John. My daughter is actually skiing today for the first time ever. I know she grew up in Utah. She's been snowboarding a little bit last year. Soccer in the winter, like it makes it very hard. But once everybody's done with that, it's going to be family snowboarding for sure. Love it. All right, let's get going. Let me get into my presentation mode. Market turned pretty nice today, right? We said, what's the catalyst possibly? We said if the consumer confidence numbers came in above, and especially strongly above, right? I said anything above 101.5. It came in at 108.3. Clearly, that was enough of a catalyst to say, hey, if the consumer stays strong and people stay employed, we'll get through it. We'll get through it. Imagine some people put some trades on. We were talking about some trades as we were getting towards the middle and end of the day on breakouts, bouncing off of support levels. This is me. I've been trading for a while and teaching for a while. This is wrong. I'm going to update this soon. I've been trading now in 2023. I started in 1999. Woo! 24 years, teaching for 20 of those. That's me. Good afternoon, Mark. Here's the disclosures. Be careful. Manage your risk. Remember that we're not advisors. We're just here to educate and collaborate. All right. Let's get going. Everybody feeling okay? There's no panic, right? There's no angst. Pre-holiday market angst, I hope not. We know the volumes are going to get lighter as we get to tomorrow and Friday. But even so, we have, if you thought today's news was big, right? What would accelerate this rally beyond? So here's basically what it is. We're rallying a little bit now. We said might be 2 days, maybe 3 days. There's news coming out on Friday that could be the catalyst that pushes it, catapults it, not capitulates it, catapults it into next week. When the volume is light, it's thin, it's easy to push, and yeah, maybe we do see a pretty hefty Santa rally, right? Okay, we've already started with some things. Do I ever do a bull call spread on a $2 stock? I really try not to trade many options on things under 10. Do I sometimes get into this high single digits? Yeah, but I would say probably not on 2. It's so hard to price the options around that, I find, right? It's just, I've never found they move right. They behave right. Stocks rally. Look at this guy. He's mesmerized. He's mesmerized by the rally. His glasses are off. He's on the phone. Mom, you watching this? Okay. Stocks rally as Nike improved consumer sentiment. Those are the things we talked about. Nike this morning. We talked about them showing us the retail way for stocks to shed inventory. That's been the big concern, and inventory peak behind us. That's what we're looking for. Is that we're getting through all of that. I told you we had a recession in the first 2 quarters. And now we're climbing out of it. The question is it going to double dip? And that's where we find ourselves. Consumer confidence rises to highest since April. As gas prices fall, expected to get below $3. A lot of stuff's going on. A lot of stuff to talk about. Nike beats. Trump paid $0 in taxes during the last year in office. Okay. We already talked about, okay, if you weren't here, we did talk about this bankruptcy. Cryptocurrency still in a bit of a world of hurt. What else? That's about it for the news, per se. This was the economic data we were speaking of. And we have the existing home sales came back weaker than what was already expected to be a weakened report. But the difference between what was projected and what came was marginal compared to the initial distance that was already forecasted. Mortgage rates are significantly higher than they were. Of course, existing home sales is going to ebb now a little bit. Tomorrow, jobless claims expected in the low 2s. Remember, for me, anything below 250, I have absolutely no problem with. 250 to 270, I'm like, okay, let's keep an eye on this. It's not until it really hits the high 200s that we should be thinking, oh, this is going to start leading to negative jobs reports. We haven't been close to a negative monthly non-farm payrolls report. Nowhere close. Nothing negative, right? Until we see this kick up. And remember that we've already heard the Fed say they're willing to accept the loss of a couple million jobs. But we haven't seen that. I think that's probably the biggest reason why the Fed is saying we still see a soft landing. Of course, once you see it, it's too late, right? Once you're like, oh, wait a second, all of a sudden we're losing jobs now, and all of a sudden it's like that's when this thing could get ugly again. So we'll just keep an eye on it. Then Friday, that's our big report. Friday's the big report. We got the PCE numbers, the price index numbers. We also have income spending with durable goods and capital good orders. We have some more sentiment, some inflation expectations. Got a lot on Friday. Right as everybody's like checking out for the holidays. Markets closed on Monday. We're going to have a very light week in volume as well as in economic data being released. You can see here we have a real estate report, which we're not going to be surprised if it's down. Home price index may be down, home sales down, jobless claims should be fine, and then some. I mean, it's nothing. It's nothing. So it's a week that whatever happens Friday, I expect to be the wind behind the sails of whatever goes on next week. Hello, Bob. Good to see you. Let's see. Now, if you weren't here this morning, we did have a chance to go through. Slight upticks followed by bigger kicks down is what Stella says. Okay. I mean, I certainly don't find myself saying, oh, I'm going to make a strong argument for the other side of that. We broke support, saying that we might come up, hit it, and then come down. As a technical pattern, that makes perfect sense. I'm not going to disagree. What I'm saying is it certainly could get back up here. I don't think it's going to get to the highs, but I think it could have something like this in that last week. Am I banking on it like, hey, let's bet some farms? Or am I saying, hey, I think I want to have a few things. That's what I said this morning. I want to have a few things in place if this happens. I took off already the entire first half on one day, second half on another day hedge. I'm glad I did. Locked in gains on that. Still have another hedge and a half. That obviously this isn't great for, but it's not enough to close it. I'm still going to keep that hedge and still look to add to it if I get more of a signal from the VIX. We'll look at the VIX in just a second. But yeah, this says bear flag and a drop, but it also says bull kick. So if it does have the possibility of catching these last 3 days, it starts with getting in here, because if you're looking at it here, you're too late. It's too late. Party's over. Party's over. That is the SPY. Let's go QQQ. If you weren't here this morning, today's unofficial sponsor is the same as the morning session. Coffee as a whole. No specific brand or flavor, just coffee. QQQ. Ah, Jeff. That was awesome, Jeff, because I like right as I said that, I looked out and I saw your comment. Gold. Love it. He said, is this episode in the afternoon sponsored by Coffee Too? And the answer is unequivocally yes. Same thing on the Qs. A little bit of a kick possibly, right? So we are seeing the kick. That's what we've been talking about is, what are we doing with our bearish trades? We're managing them so that if it all of a sudden makes a big move against us, we don't give it all back. Hopefully you've been managing any bearish trades you had, like my first hedges. Manage them. Is there still some more? Probably, right? We're probably, we don't want to get caught ever on completely with nothing on one side or the other. I don't anyways. But yeah, a little bit of a upward consolidation, but certainly projecting a bigger downside kick. The model is picking up on selling pressure. We saw selling pressure when it failed to make new highs. It had a little bit of a failed signal here. This was looking pretty strong right there. And if you remember, the projection was okay until that came, and then all of a sudden, boop, boop, it adjusts back down again. So that was a failed bullish signal. Now what? Followed by a break of support, followed by a lower low. Yeah, you cannot make you can't make too big of a argument against that type of a consideration, without a doubt. Let's do DIA. We'll do IWM. We'll have a quiz. We'll get some volatility analysis going, and then we'll go from there. So this is the Dow. The score's high, range trend looking for downward. You can see small, ever so slight kick and then down. But again, that's that first 2 days. And if it's going to be a 5 days, VIX says buy after yesterday's drop, short term, correct? Yeah, right. The VIX said that yesterday. The VIX gave a lower high. That absolutely did. 100%. 100%. It's part of that was like one of the only things where it's like, oh, with whatever else was going on, the VIX never really surged a lot, right? We broke support, but the VIX didn't even get to the high 20s. What did we get to? 23? Wasn't much. And let's look at the IWM, the VIX. It can be mystifying sometimes, but if we just sit back and become one with the VIX, it will tell us that what we need to know. Become one with the VIX. Be the VIX. Can I explain? Remember that I will take half off at 5% drop, Jacques. The 5% drop. So in around 400, 5% puts us at 380. So the first piece was the VIX at, we got in here. This was back around the 5th and the 6th in this area when the SPY was at 400. And from that drop, actually, it's really more accurately from this drop, but when it dropped 5%, which it did here when it hit 380, that was the first target. No, actually, it was here. Did we hit it here? No, that was a low of 381 here. So that was the first piece. Remember that with a hedge put on December 6th, you're 2 weeks, like theta's ramping up. If you have that on, it's ramping up. So when you get to this point, there's a couple of things that you could be looking at, but for me, the VIX was the first thing was, did it hit my target? Yes. The second thing is, did it create a lower high? And we talked about the lower high coming if you said you go with the bodies. And you guys know I'm somewhat ambiguous. I will go one or the other. But I didn't go with the bodies. I went with I went with the shadows. So it confirmed when it closed below that low there, so you can see the VIX low was 2161, and yesterday it closed 2135. So that created a lower high. That lower high is not enough for me to take that hedge off right there, but it is enough to take this hedge off back here because the time difference between those two, this one is rapidly getting worse. And they were very promising. I to be honest with you, I actually thought about, like, maybe do I not stick with that rule and keep it, because I did feel like it was looking good. I mean, today, obviously, we had a surprise catalyst. So now I'm like, well, I'm glad I stuck to my rule, which is first 5%, take it off. And I took half off. Sometimes I'll only take a third, then another third, and let it run a third. I actually couldn't give you a good explanation why this time I didn't on that one. I might regret that and wish that I had. Right, and so that's what's going on there. I did a half. Can't remember, right there was just a half, and that was would have been on the 9th. So that one it's not great, but it's, so there was a half a hedge here. And you can see that one, that was a scary one. It's like, oh my gosh, what's going on? And then it started to come to fruition. That one's still on. The other one is still on. Obviously, the higher low was here on the 15th when we closed above here. And it was actually up in this area the last hour. It was up higher. That was on the 15th. The 15th was, and so the 15th wasn't here, it was here, right? It was, that one's already come, that was already, down a bit. So the half a hedge was working okay. Then this one got put on, and you can see, where is it now? Yeah, it's a little better than break even. So what am I going to do? I'm going to hold on to it. So if it goes up and then up and then up, that one's going to possibly take a loss, but that's why I want to make sure I get something on to the other side. Let me know if you have any other questions about that. And let's go. Where were we? Well, let's do that quiz. I think that's where we were. Quiz. Okay. I'm going to go through here. Just below 387. I'm going to go right across these lows here, and then I'm going to come down here, ABC. 386.90, 385.65. ABC. Give it to me. What are you seeing? Dennis says we're going to finish in the upper range. Up in the upper range. Anybody else? Okay, says B. Jeff says C. John is a B. Jacques is a B. Bob is an A. Bob's looking for the breakout. Fingers crossed. Sounds like it's a hope more than it is an expectation. Mark's a B. I feel that too. It's like, we might test in the A range, but we won't hold it. But it doesn't look like it's going to break. We tested it here in the morning, again in the early afternoon. Here we are, late afternoon. This 385.60 level seems to be holding. I'm gonna go B. So I've got Jeff on the downside. I've got Bob on the upside. I've got everybody else in the middle. Anybody else want in? The action's good. Okay. Cool. So what does the VIX tell us now? So this is the bounce. We said we were thinking there's a very good chance we have a bounce. The VIX is looking pretty strong. So here's the thing as far as this goes. There's no higher low now because that was the low. Right? That was the low, and we've taken that out. So there's not going to be a hedge Now, unless you make a kind of a judgment call, and that's, I have no problem with that, because anything above that 19 level. So you might say, you know what, even if this happens, that's my hedge. That's my hedge. Okay. I would be okay with that, especially if you're hedging something bullish. You might look at this and say, I've got a new consolidation, 1.2 points. So now I would wait until it breaks that. So maybe that puts you a day behind. Maybe it's the same day. Hard to say for sure, right? But there's the higher low with a break. There's the break. There's the higher low. That's the signal that tends to come before the big swells. We're not going to have that. So you have to decide. Do I trade any low above this 1895? If it gets back to 1895, then you might say, you know what, that's bullish enough that I don't need to hedge that now. The fear came back down here, then you would be looking for the next lower high to the downside. There's no script and formula for that. The VIX is just giving us as much good information as possible about institutional mindset that it's very difficult to get anywhere else. And so that's if it looks like it's escalating, I get nervous and I trade a little more nervous, a little tighter stops, less risk, quicker profits, etc. Right? So that's the question: is where are we in that? And we're still a bit in limbo. We're a little bit in no man's land. There's no concrete answer that says, oh, it's this, so you're that. It started to escalate. Now it seems to be de-escalating, but we're still in what I would consider to be the escalation zone. In fact, I would probably, if I were to draw it, I would probably say the escalation zone for me would be, kind of right through here where I'm getting, and then I would say right through here. If we get to the bottom of that and we retest this old low because it just keeps coming down, then I'll be like, oh, it feels like we've kind of come out of this, and I would definitely be less inclined to hedge. If we see it get back up to this or even through this, we're going to probably be in a pretty bad place. So that's how I see the VIX as of right now. Let's dive in. Do we see everything that we wanted to see? Where do we see the most? We're seeing some good flow out of energies. Industrials. Oh, Boeing. We have consumer defensive. I mean, everything's green, right? Everything's green in this case. But what we're looking for is how much follow through is there going to be. Let's get into the watch list. Let's get in. Where's my watch list? Did I miss anything? Is there anything that needed to be discussed that hasn't been? Oh, I was told to look at Nicola. Oh, 9%. I don't know. Yeah, I mean, you can see the consolidation still seems to be a bit intact. If I drew the line, connected right across there. I mean, obviously, if I drew a straighter line, I'd probably want to see it pop up, get back probably almost to this 3 level, and then give me a higher low. Then I'd be like, okay, Nicola, let's go. Okay. RTX not overbought like BA. Raytheon. Yeah, Raytheon, that looks nice. What about General Dynamics? Somewhat similar. LMT. So LMT and General Dynamics look pretty similar. I would agree. Raytheon seems to have the best chart. A little more defense than industrial, but definitely in industrial, right? Yeah. I mean, Boeing gave its signal back in here, and it's already moving. RTX. Come on, let me put it in. RTX just barely getting that turn signal today. So I would agree with that. I'm curious how the model's not seeing much in a bullish fashion. We know that. Ukraine is buying RTX missiles. That makes sense. Stella doesn't like it. Stella doesn't like anything. I mean, that's just a fact. Just a fact. Boeing. I mean, even Boeing was okay. We'll see. We will see. Let's get to the top of the list. Alcoa. So you're going to see a lot of these that really, I mean, even this was yesterday. I mean, today it's not doing much, but is this the turn you're looking for? Apple. They're all showing this bullish hook, but the question is, which one is showing it to us in a situation off of a same low or even a higher low? I would say ADI was close, right? ADI, probably the best looking one so far. Boeing gave its signal off of a higher low 2 or 3 days ago. BABA, that's definitely a possibility, as then would FXI. I think I like FXI better. Caterpillar, ConocoPhillips, Costco, DBC, DE, John Deere's. You could probably still think about that, but I would say from a signal standpoint, RTX probably does look the best. Disney, everything's bouncing off lows. There's another one. FCX, it's all the way oversold. Higher low. It's a doji today, but it's a doji that's up 1.5%. I would say that's viable. Let me see. Let's see. We're going to find one that Stella's just like, yes. Yes, not this one. Not this one. Not yet. But I do like FCX. We'll come back to that maybe. FedEx, coming out of earnings, a little weird. FXI, I mean, that looks pretty strong right there, right? What would I have the ability to do? I would say we have the ability to put a stop loss underneath here, just like we would have put it under here, put it under here. We got that move. That's 23 to 27, so we'll call that 4 points. We got that move. 25, 21, 29, 20-ish. We'll call that 4 points. Consolidate, turn. Where's the 4 points from? Not from here, from here. 27.40. We'll call that 31.40 then. Up here. Oh, that happens to be a nice little area that we've seen before. 31.40 target. That's about a $3, 31.40. No, what is that? 270? 270 to the upside. I actually wonder if this might be giving us a hike and ASCII candle. Not quite yet, but that would allow me to put a stop loss, maybe $1.40 away. So I'm getting about 2 to 1. 2 to 1. Maybe. Okay. So let's just go back to RTX. Fair enough. Goldman Sachs, GlaxoSmithKline, not bad. IBM, don't like the initial sell-off. Same. Eli Lilly, maybe. Here's one. MasterCard. I'd say MasterCard, ADI, RTX. Meta, it's a little sideways. Merck, if you like healthcare, Merck is definitely given a signal there. Marvell, no. Microsoft, maybe. Netflix, same. NVIDIA, same. Oracle, QQQ. Starbucks. I think we kind of saw a nice little smattering. SMH, NVIDIA is better. SPY, we're pulling back a little bit, it looks like. Let's see what we have going on. Oh, so we broke down into the C range here just for a minute, a hot minute, and we're back up. But ooh, okay, okay. Toll Brothers. Yeah, I mean it's got signals. It's pulled back off the high, but that just means you're not paying as much. Valid if you liked that. Tesla, oh, back to negative. Oh no, it's positive for the day, just barely. Not good. UNG still holding. If UNG turns, I think that would, like I've said, I like UNG for the energy play. Looking to enter that. I would say definitely before it gets through this gap. So maybe above 1750, something like that. Or if I have a nice signal tomorrow. Visa, I like MasterCard better. VIX, we analyzed. These are all three coming off new lows. So if you're thinking to yourself, Ku says, take a look at United Healthcare. Here's UNH, United Health Group. Pardon me, United Health Group. Agreed. I think I like Merck. Merck to me had the best trend, best signal, real consistent stuff for healthcare. But yeah, I would say UNH looks good, Lilly looks good, Merck looks good. If you like technology, I'd say Nvidia is probably your best bet. Or there was another one. What was it? Nvidia and Microsoft. That's what it was. Microsoft. Financials, I would say MasterCard is probably the best one. Industrials, you have industrial / defensive with RTX. Does this have a Heiken-Ashi candle that we like just yet? It does. Okay, even better still, right? So you might say to yourself, I'm gonna go ahead and go with a tighter stop loss. So rather than waiting for it to break here or even break here, you're basically saying, I think this is the candle, right? And it's not the first white candle. That was the first white candle, but you can see that was a small body with a shadow. This is a bigger body, no lower shadow. Bigger body, no lower shadow. Where would the stop go? Right underneath. Right underneath. And I would be able to potentially adjust it, let it ride, whatever the case may be. I'm definitely looking for a certain amount. So where would the stop loss be? I would say 97.60. It's about almost 1% below the low. 97.60. It's about down here. It gives me about $2 of risk. Upside potential. Well, we last time we went from about 95 upwards of 101, $6. So it's risk 2 to make 6. Target price 106.50-ish, something like that. Let's see. Let's say there to there. That's about 8 points. So 105.50. 105.50 is 6 points. That's perfect. 105.50. Yeah, okay. Implied volatility is very low on RTX, right? Back in here, you'd be thinking, let's do a spread trade. Volatility's up at the high, up near 40%. Right now, volatility's at 23. It's the lowest it's been in, let's see, probably a year if I had to guess. It was the same down here. You'll notice what was going on. It was very bullish, right? Okay. Vlad plays NOC Northrop. Is that Northrop Grumman? NOC. I mean, all the defensives are fairly similar in their momentum and movement. NOC. Northrop Grumman Corp. Yeah, that one looks more. I would agree. I like RTX's price action better. The other three all have a very similar look and feel about them. Yeah, I agree. RTX. What time is it? We're doing pretty well with time. We got through the whole list, right? We did. Okay, let's go look at this trade. Let's go analyze RTX. I mean, the standard Januaries give us 30 days. That really should be all we need. Let's go singles. I mean, these 100s have a ton of open interest, 17,000 contracts. Now, you might think that's going to make it so much better, but you'll notice that the spread there is 8 cents. And if you go one down and it's 100 contracts, it's 9 cents. There's like when you see that there's a significantly higher number of open interest at the round numbers, in this case, 95, 8,000. 100, 17,000. 105, 8,000. It doesn't mean that you're going to have like 2 cents of liquidity there and 15 cents everywhere else. You'll notice it's pretty standard, right? It drops to 6 cents here at the 105, but you're getting pretty far out of the money. 8 cents, 8 cents, 8 cents, 7 cents, 7 cents, 9 cents. And then when you start to get to this level, it's 15, 15, 10, 15, 15. So yeah, it's there's not a huge amount of difference. I would probably end up going with the hundreds. At the money's fine for me. Now, here's one thing to think about. If I go at the money, this Vega here, if the stock drops and it stops me out, drops down to what do we say? We said 97.60. We said 105.50 to the upside. That's fine. 105.56. If it drops, it looks like I'm going to lose a certain amount of money, right? But if the implied volatility were to go up, even just from here back to here, that is a 4% increase in implied volatility. 4% increase in implied volatility. So let's say, let me get to today. Today is the 21st. Let's say that by Friday, 2 more days, 1, 2, it drops down to 97.60. If I had 10 contracts, I would lose $935. Let's adjust that to our range. We'll put it to 3 contracts, about 200 and somewhere between 280, right? 280. Now, if I'm right, I could make upwards of $1,100. So my reward to risk is there. But you'll notice here that it seems like I'm going to lose $282 because it dropped to 97.60 and it took 2 days. So I lost from Delta and I lost from Theta. But what about Vega? What does that do? So if I go to the Vega and I add 1%, just 1%, my loss goes from 284 to 250. That's pretty good, right? If I add 2%, 220. 3%, 189. 4%, 150. 280 to 150. So would I have an expectation that it can go up at least 3% from here to here? Yeah, of course. It could go even higher, potentially go to here. 3 more %, and that helps. What is it doing? It's giving me a bit of a Vega hedge, right? Vega has its greatest impact at the money. So a lot of people are like, oh, you should always buy in the money options. It's not necessarily true. If you buy 0.8, 0.9 deltas and the implied volatility rises, it doesn't help you at all. You're just losing intrinsic value. So I'm okay with this. I think the way this looks, it looks great. I wouldn't expect the volatility to drop 4%. I would expect it to hold because it's at its lows. So I think that I'll get that other money. I won't get the 4% if the stock goes up, though, right? I don't think that. So I'm only looking at the lower number, the 97.60, when I'm looking at that increase in implied volatility. Otherwise, if it stays the same, if it goes up, but look at that. I'm getting that's 4-1, I believe. Although if I'm right, it'll probably go a little longer, maybe to next week. So that takes me to the 30th. But if I'm right and it gets to the 30th, I'm still making just under $1,100. If I'm wrong, I'll know sooner than later. And hopefully by Friday, 276 to 1,100, still close to 4-1, right? 1,100 divided by 276. And 3.98, 4-1. And like I said, I believe that if it were to go down and the volatility were to rise, we would lose less. Lose less. That's my thought. Right now, this thing's probably trading around 233, in fact. 233, that's about 250 of risk. Yeah, let's give it a shot. We'll let that sit there for a minute. John said he's in. 233. Where are we? 230 by 230. Okay, let's go 234. I'm fine with the extra penny. I want the best price. John said 235 for him. That could be right. That was my live as well. All right, let's just take 235. There we go. 235. Yeah, okay. So there's the risk profile. I don't need all that. I don't need to see all this. So I'm going to move it over. Then I'm going to widen it out so it can readjust. I just care about my trade, which is here down to 97.60, here up to 110. This is where we are now. So what would I do? Well, 3 contracts. If it gets up to, like, I would say, if it got to this level here, 103, I'd probably take a couple $100 off the table. Right? The whole trade we'd be making about 6. You could sell one, take 200 off the table. And at that point, even if it were to drop back, you'd still make money. And then try to ride the other 2 up to this level here. So that would be about 780 for the other 2 contracts, 980 total. So I think this trade has a very legitimate potential to make $900 to $1,000. And that includes scaling out of the trade by selling an early piece for a smaller gain, right? But on the downside, I also think that it has the ability to lose barely, only half or a little more than half of what we expect if the volatility were to rise in our favor. Okay, let me know if you have any questions. I kind of went through a lot of things there, playing with the volatility a little bit, just really trying to understand what am I trying to accomplish with this trade. I really want one of these, right? One of these little jumps. 1, 2, 3, 4. 1, 2, 3, 4. 1, 2, 3, 4. Right? I want one of those jumps. And as it's coming, 1, 2, 3, 4. If it gets up here to 103 on the second day, I'm going to take it. And then if it can get a little further and get to that level, great. And if not, I'm going to manage it the best I can. So if it goes up a little higher and starts to stall, I'll sell another one of the 3. Tighten up the stop on the last one. And then if I get any kind of a bearish signal, right, a cross, a bearish candle, something along those lines, sell the last one. And you did the best you could with a trade that didn't accomplish what you hoped it would accomplish, because they're not all going to when we're right. That's what I mean when I say if you want to be right, have more than one idea of what would happen, and definitely know what you're going to do if you see any one of those scenarios take place. Okay. RTX. What else? I want to see if any of the other ones we're looking at is giving us a nice. I love that Heiken-Ashi, and I know we're close on some, and I could certainly play off of that. So I would say you can see Caterpillar's already starting to see the stop get tightened. FCX, that's valid. That's a valid one there. I'd maybe like a little bit more, but you can see even this is very similar to this. The first candle, small, no shadow, but that gave us the kick. There, and then you got 2, 3, 4, 5, 4 subsequent days. That's what you'd be looking for here. FXI, you don't have it, but you're a day away. So if you started here, you'd be able to move your stop here pretty quickly. And I don't even necessarily mean a hard stop, but just like a stop level where you're saying if it crosses that, if it closes below that, or whatever it might be, this is your line in the sand, right? So FXI is very close. MasterCard, a day away. Merck, almost. Oh, it's just right there. I mean, that's an almost, but basically is. Microsoft, a day away. NVIDIA, a day away. What else did we look at? Patriot missile, a cost of $2 to $3 million per unit. They come in 8 missile batteries. Wow. Missiles cost a lot of money. Oracle is given a Heiken-Ashi, a momentum signal. I would say that's about it. So any of these trades, as you're looking at them, as you're building them, you're asking, how quickly can I manage this in my favor? Microsoft, very quickly. NVIDIA, very quickly. GSK, it's already there. So you can kind of see what do you have here you don't in other areas. You have a higher low. You have a turn. You have a Heiken-Ashi. You have situations that allow you to look at and construct better trades that are, it's not necessarily means that it's more likely to be right. It means that we can build and structure the trade around that as a level. I can put my stop if it closes below this level, I can put my stop below that level. Those kinds of things that provide us with very specific trade management thought process. If I have that showing up on a trade, all the better. Okay. I think I'm just going to leave it there and let everyone decide if they're thinking about more trades. I don't like to ever trade too much because I know sometimes people just take every trade that comes across. And I want it to be more thoughtful. How does this fit into your portfolio? Yeah. Let's go look at the SPY. Ooh, all right. We only had one C, and I think they're going to win. Jeff said sellers are going to come. You can see it held. It held here. It held again here. And then all of a sudden right now, right, as we get into this second to last 5-minute period, volume is ticking up and it looks like it's trying to bust back through. Not by a lot, but it's there. Jeff says that SPY is coming up against its 200-day moving average, which, as we all know, has a strong tendency to act as support and resistance once it gets on one side or the other. So that is certainly something that is worth paying attention to. But look at that. It's back and forth. We may have to give this one a little bit of time. Any trades that, oh, look at that. It's already is. I was about to award it, but what were my numbers? 30, 385.90 or 386.90 by 385.65. Does that sound right? 65. So right now we're 10 cents below the the B level, 385.65. I'm pretty sure that's what it was. Someone tell me if you think I'm wrong. Let's go look at the VIX. If I can. Yeah, I mean, it hasn't gotten back to the teens, but it's knocking on the door, right? There's really only 2 days in this last little bit there and there where we are lower than this. 2 more good days this week, and it's going to be back down at this 19 level or maybe even lower still. Even when you look at this, you can see back in the Christmas rally last year, it got a little bit below this for a little bit of time, but not very much. So now what's coming forward? So, okay, we're looking to see, does this turn into a bounce with a couple of days? Can we manage it well? Do we get a head signal when it starts to slow down? Do we start speculating more to the downside? I think these are the questions we'll be answering tomorrow, Friday. And then I'll see you again Wednesday of next week in the afternoon. But yeah, we've still got plenty of time to talk about it, to think about it. And we will discuss tomorrow morning. There's a little bit of news tomorrow. Friday's the big day. I definitely think the Santa rally could still happen, so be ready. All right. It's good to see everybody. Will TB the sponsor tomorrow? I mean, I never know for sure, but if I were a gambling man, I would bet on coffee again. Oh, all right. Listen, everybody, have a wonderful day. Don't forget, 3 shopping days left till Christmas. Get it done. Have a great day. As always, happy trading.